Welcome back to Nasdaq Trade Talks. I'm your host, Jill Malandrino, Global Markets Reporter at Nasdaq. We've been coming to you live from RatesEvolved, brought to you by Viable Markets. It's the industry's only global interest rate conference. Joining me for this segment, we have Dick Berner. He is the Executive in Residence and Adjunct Professor over at the NYU Stern School of Business. Thank you so much for joining us on set. And the fixed income market's so complex, so many challenges facing it. What are some of the initiatives you're looking at?
Well, some of the challenges I think that fixed income markets face are, external to those markets. So take Brexit, for example. The separation of the UK from Europe presents a number of challenges, one of which is when we think about how the payments clearing and settlement mechanism works in fixed income, if that becomes more fragmented with clearing and settlement and payments going on in Europe separately from what's happened in the UK, and the laws change, then that will reduce the transparency and the liquidity of those markets, and it will make them less efficient. Market participants would like to see those markets stay on the level playing field. Right. So Brexit clearly creates issues for that. There are other macro challenges, obviously, changes in market structure, the introduction of new reference rates. We can talk about that.
Right. And this is SOFR that you're referring to?
Right, this is SOFR. Changes in market structure in financing markets, securities financing markets, what we call short-term wholesale funding markets that help to finance Treasury securities. So there's lots of challenges out there. And of course, the introduction of new technology. Electronification is now prevalent in fixed income markets, more in Treasuries than in other asset classes. But nonetheless, it's becoming increasingly prevalent. And so think about what the operational risks are in those new technologies. Are they vulnerable to cybersecurity incidents or just breakdowns? How do people guard against those? How do they build backup facilities and make them more resilient? Those are some of the challenges that are out there.
So, I mean, that's certainly going to impact market structure itself. It's really interesting when you talk about electronification. This is the largest market, the fixed income markets. Yet it's one of the last ones.
And the most important.
Right. So I had asked you the question before. If you fail to prepare, are you preparing yourself to fail? And I think that's a concern when it comes to regulation.
It is. Both regulators and market participants have to prepare in advance. Each has to talk to each other to know what the rules of engagement are, have a clear understanding of what they should do, what they shouldn't do, not only in normal times, but also in stressful times. And more work needs to be done on both those things.
All right, now, in the course of our business, we talk to the sell side, we talk to the buy side, issuers, indexers. Where does academia fit in the global interest rate environment?
Well, people in academia are doing research on fixed income markets. They're interested in how price discovery occurs in these markets. They're interested in whether the markets are functioning well. Actually, those are the same concerns that market participants and regulators also have. So my perspective is that academia can play a role in bringing these groups together, in providing research, background information, without a particular axe to grind, and bring them together, and having a conversation among those three groups is very useful. That's something I've tried to do throughout my career. I think it still works.
All right, Professor, thank you so much for joining us at RatesEvolved.
Thank you.
And thank you for joining me throughout the day. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.